Hello and welcome to this video. In this video, we're going to go through your comments. You see, one of the best things about having a YouTube channel is that we get to listen to what's going on with you, what issues you have, and we get to go through and answer them accordingly. And that's what we're going to do on this video. So join me as we go through answering your comments. Hello, my name is Aaron Patrick. I am a chartered accountant, a certified UK trainer with a fancy new logo, that QuickBooks Chap on the internet, and also head of account here at Boffix. And here on the Boffix channel, we get questions all the time from you guys asking us little questions about either that said video or about stuff in general. And that's what we're going to cover today. So first of all, how do you get a comment over to us? Dead straightforward. Have a look. Well, as you can see here, I'm on the Boffix channel. Don't forget here, we've got a nice subscribe button just there. I'll press that button. There we are, subscribing away. And from here, you have the option to go through and obviously look at our videos. And if you jump on any of the videos that we've done, like this one just here, then it will give you the opportunity to see these comments down here. And from here, we would either answer them, reply to them. But what we're wanting to do today is reply to them live on this video. So if you do have any questions, don't forget to use this comment box just here, add your comment accordingly, and then we can answer them in a future video. So let's have a look at comment number one. Comment number one is from Knitting Today, and it says, what if the undeposited funds account is other current assets, not current assets? Will that affect the spreadsheet import? Great question here. Now, what this is referring to, just so we can understand exactly what the question relates to, if I was to bring up any of our videos, just like the one I was just on, and I went to the show more button, you'll see that we have the option here for our link tree. Clicking on that brings up our link tree. And from our link tree, you'll see that we give you an opportunity to get lots of information from us. So you can book a chat with us, or you can get our discounted QuickBooks licenses. Why pay more for QuickBooks when you can get it cheaper through us? You have the option to set up a company or maybe a bank account. We've got some partners that we're with there to help you on that. But the bit that we're talking about here is the resources guide. From here, we have all of these free resources or some paid for integration options as well. But regarding these free ones, we've got quite a few options here that are quite useful to you. Now, the question in here is this connect to eBay to QuickBooks manual. So I click on there, and basically it gives you an option to be able to click and get some information to actually be able to get your information from eBay to QuickBooks Online completely free of charge. And that's what this question's all about. You see, this question is asking that if you use one of our free guides, if you haven't set undeposited funds up, which is one of the requirements for one of the import options, then will it still work? And the case of the matter is, of course it will. You see, the way that QuickBooks deals with undeposited funds is it will only let you open it up in a certain way. It is designed, undeposited funds itself, to be a place where you can post transactions and post payments against transactions with an opportunity for you to be able to be more auditable when it comes to adding those transactions to the bank. So QuickBooks itself won't let you post that in the wrong place. So all you need to do is make sure that you have undeposited funds within QuickBooks Online, and then our spreadsheets will do it for you. Hope that helps. All right, our next question then. Mason Lillies asks, what do you do if you already have the undeposited funds account for PayPal integration? So again, this is talking about the same sort of issue. Undeposited funds within QuickBooks Online is a really useful area. And the whole point of it is to make it easier for you to be able to reconcile all of the money that's coming in against bank transactions. Because if you think about it, most of the time when you get paid from or paid into a bank from a third party, say from PayPal, Stripe, anything like that, then very rarely do you get paid on an individual basis. So very rarely will each payout be related to one individual invoice or one individual transaction. And what normally happens is those transactions come in multiples. And that's where undeposited funds comes from. So in this case here, the question is basically they've already set up an undeposited funds account. Can I use another one? Of course you can. You see, all you've got to remember is that the whole point of undeposited funds is that it's basically going to say that if your transaction, whatever it is that you're trying to do, maybe paying off an invoice or making sure that a particular customer is being reconciled properly, then or using undeposited funds is a way for you to manage that, to make sure those transactions are actually coming into QuickBooks correctly. And then what will happen then is that when the money comes into your bank account, then instead of having to go through and find those individual transactions, you can state that you've already expect the money to come in. Say it's going to be £2,000, and that £2,000 is going to be split between all these different transactions. And it doesn't matter if you have multiple items going into undeposited funds. That's the whole point of it. Undeposited funds is designed to make your life easier. So if you're already using it, then you're already halfway there. Therefore, you can continue to use it with all our methods as well, and also with any of the other integrations that we've got. And that's going to make your life easier and make sure that your items can be more auditable going forward. So good luck with that one. Next question. So my net profit is as a sole trader should be income less expenses, not including drawings. Drawings should be included in my profit, ? No. In relation to a video we did a while ago where we were talking about what it is, what it means, and when you get taxed as a sole trader. And the most important thing to remember about when you get taxed as a sole trader is about that profit element. So in here, we're talking about the fact that my net profit as a sole trader is income less expenses. And then the book stops there. Doesn't matter at that point how much money you draw out, and that's all that drawings is. So this idea here of drawings is basically you remunerating yourself, you taking money out of your business to be able to fund whatever it is you need to fund, your mortgage, going on holiday. Doesn't matter what the money is used for, but when it comes from a tax point of view, it has no bearing whatsoever on your tax. You see, as a sole trader, and this is important, this is only as a sole trader, limited companies are treated differently, but as a sole trader, you see, it doesn't matter what it is you take out of a business. You could take out £1, or you could take out £10,000, or you can take out £10 million. For a sole trader, those numbers that you physically take out of your company have no bearing whatsoever on your tax return. You see, your tax return will always be income less expenses, and that's it. So if you have income less expenses and you take £1 out, and you have income less expenses and you take £10,000 out, your tax bill won't be any different. So in this case here, should drawings be included in my profit? No, because your profit, your taxable profit, is all going to be related to what goes on your tax return. Therefore, it's only going to be related to what business income you've made, so what you've sold, and what business expenses you've incurred that are allowable. Hopefully that's covered that one up. This is something that as soon as you get your head around it and understand it, you'll know that it will be very, very beneficial to you. And also remember that as a limited company, it's completely different. And sometimes that can have a massive benefit to your tax bill. Okay, next question. Hi Aaron, if not using QuickBooks and using my own spreadsheet, how do I document where I show the takings of drawings? Also, do I pay my taxes from my personal account from the drawings I've taken, or do I pay it from the business account, and how do I show that payment? Great question here. And again, it's along the same lines as that last one. So we're going to have exactly the same scenario here. It doesn't matter how much you take out of your business, doesn't have any difference whatsoever on what your tax bill is going to be, as long as you're a sole trader. Again, this is all down to being a sole trader. So how do you document it? Well, all you need to do is say that when you take money out of your business, so it's either out the bank account or however it's going to be, just say that you're going to be taking out drawings. Drawings itself is just you taking money out to live on, for you to take money out of the business that you need to survive on. And that's all that drawings will ever be. You see, drawings is a great way for you to be able to show how much money that is you need and what is your remuneration targets that you need to be able to pay your mortgages and your rent or whatever your monthly outgoings are going to be. But they have no impact whatsoever on your account. Again, when it's coming to paying your tax bill, well, that's just a form of your drawings. So it doesn't matter if you take the money out of your business and you put it into your personal bank account and you call that drawings, or if you pay that tax bill directly from the business. In both scenarios, they're going to go towards drawings and have no impact whatsoever on your tax bill itself. So drawings, it should be just an indication of what you've taken out to be able to survive from your business. It has no relevance to your tax bill whatsoever, and is just a way of you understanding how much money you need to survive. Drawings can be a really useful metric for you because it's an opportunity for you to understand how much you've actually taken out and how much you need as a business to generate each and every month to be able to make sure that you're being remunerated for the work you're doing. Next question, business coach. Can you please a mechanism or mention a web resource for mastering taxation of Great Britain in order to offer freelancing services? What a great question. So first of all, first and foremost, you need to have real-time information to be able to really understand taxes. One of the things that you need to understand is how much profit you're making at any point in time. And that's going to give you an opportunity to understand how much taxes you need to pay. Now, in this case, I've got two great tips for you. Okay, so tip number one, if you're already using QuickBooks and you've got yourself, and this is if you're a sole trader, and you've got yourself as an account and settings and you've made yourself to be a sole trader just here, sole proprietor, then when you go into QuickBooks Online, you can go to taxes, income tax, and this will then give you an estimate of what your tax bill is going to be. So in this particular one, I have £25,000 of income, £47 of expenses. This is a dummy client, meaning I've made a £22,000 loss. If that was the other way around though, it would show a £22,000 profit and it will tell me exactly what taxes I need to pay on it. So you can use that if you're using QuickBooks Online. If you need a copy of QuickBooks Online, don't forget our wonderful Boffix e-store where you get some discounted cost on that one. If you're not using QuickBooks Online though, then we actually do provide a free resource under our free resource section. Under tax thing, make a copy. And this here is designed to say what type of company you are, if you're VAT registered, what year you received your income in, how much income you've actually received, how much expenses you expect to incur, and what your tax bill could be. That's a complete free resource for you to have a go at keeping on top of your finances going forward. Hope that helps. Okay then, and the final question for this one. Nia asks, new Mac sounds good. I completely agree. Any ideas on what would count for property investors? So I assume here it's about what technology, what assets you can acquire that's going to count towards being a property investor. And the good news is pretty much any form of technology that has some sort of business purpose is going to be allowable. You see, you think about it, these days, being a property investor, you need to make sure that you've got your Facebook, Instagram, social channels all locked down. You need to be able to make sure that you get access to the right moves and everything else that go in there. You need to be able to make sure that you can go on to use QuickBooks Online or whichever bookkeeping software that you're using. There's always going to be a need for you to use a device. And all you need is one business purpose for you to be able to make that allowable for business needs. So if you need a new iPad and you're going to be using that for business use, great thing is that all of that cost will become a business cost. If you need a new iMac for whatever reason, including even editing some videos that you might want to be sending to your potential client or whatever the need's going to be, then as long as you have one business use, you can put it through as a business expense. It's not allowable for every single type of business transaction out there, but when it comes to technology, computers, laptops, iPhones, mobiles, tablets, cameras, you name it, most of those sort of transactions there, they have no what's called benefit in kind associated or personal use associated with them when you use them. So you don't need to worry about any adverse tax consequences if you do happen to have personal use on them. It's one of the nice perks of having your own business is the fact that you buying this technology to help your business expand and help your business grow means that you can also use that technology for personal use with no adverse tax consequences as well. Now that doesn't mean you can do that with everything. Cars especially are one to avoid, but when it comes to technology and looking at getting new computers and tablets and stuff, you're absolutely in your right to go out there and get yourself sorted. Also, good news if you're a limited company, we're in a great time to invest in capital expenditure because we now have the super deduction, which we did a whole video on, where you can actually buy some capital assets for your business and be rewarded in more than just the actual cost of it going forward. So I hope that helps. And if you do get yourself a new iMac, let us know below which one, because I personally know that that'll be a great investment for you. Cheers. And that's it. That is all the questions that we have for you today. But let me know below here how or what sort of questions you want answering in the next round of these videos. Is there anything that you know that has been a bit of a difficult one for you to answer? That could be the best way for us to be able to go forward and do this on a more regular basis for you. Just let us know those questions below. Also, if you do have any kind of more accountancy related or about being an accountant, don't forget we have the Going Concern on every other Thursday at 12 o'clock, where you can ask us live on air. My name's been Aaron Patrick. As always, it's been a pleasure to do this video for you. Don't forget to like, subscribe, all that jazz to this channel. We want to make sure we get as many eyeballs on this as possible so that many people can get their questions answered. Pleasure as always, and I'll see you in the next video. Bye for now.